Okay, so what kind of situation do we currently have on gold? Now, if you remember from our previous analysis, what did we say? This level is very strong support. Now, even if from the weekly we want to see the market go to the downside, we cannot be looking for any shorts until we will clearly see a daily close below this structure, which at the moment the market still hasn't shown. In fact, everything has been pushing to the upside. But in terms of the analysis, nothing really changed. So let's remake a full breakdown and see what we can be possibly looking at on gold. Now, from a monthly perspective, the market definitely seems very overextended to the upside. We're also now approaching a strong monthly resistance here. So we might see a little bit more upside before the retracement to the downside comes. We go down on the weekly, and on the weekly time frame, what we can see. On the weekly, we can see that our possible short-term target to the upside is inside of this area before a possible continuation to the downside. But the target that we have is this red candle here. Now, if you're asking yourself why this red candle here is the downside target, because in all of this impulse to the upside, there is one candle which is not related to the move, which is this red candle here, meaning that the market has reacted to the zone. And so we can expect the market to want to go and grab some liquidity again inside of the area. Going back down on the daily from where we started this analysis, we have our downside target. However, as we said also in the previous analysis, at the moment, the structure from a daily perspective on gold is absolutely bullish. There is nothing that is showing weakness. And until this will be the situation, we can't be looking for any shorts. Clearly, the previous resistance or support is still holding, and the market is now trying to complete this impulse correction and impulse pattern to the upside. Now, one very interesting thing that the market could do is this. Now, keep in mind that many people are currently watching this level here because they all see basically the market creating this inverted head and shoulders. And they're all watching this neckline for the break to the upside, for the continuation to the upside. Now, since the market definitely seems overextended on the weekly, we will not be looking with students for any longs. If the market will just continue to the upside, we're perfectly fine with missing out on the up move on gold because there are way better pairs with better probabilities and better risk to reward. So the way in which we will be approaching gold is like this. We have our downside target. Let's just put a horizontal ray on it to keep the chart clean. And we have two structure levels. This one is the support and this one here is the resistance. And what we're waiting for is we have the downside target. We're just waiting for this structure to break on the daily time frame. Now, a break of structure can happen in two ways. Either the market will create a fake breakout, so a break to the upside and then a break back below the level. At that point, what we will be doing at that point, it will be very simple because the market is supposed to go and retest the level at which it created the fake breakout. So in this case, this previous resistance, which is again resistance here, plus giving us the possibility to look at this head and shoulders. And basically inside of this area, what we will be doing, we will be monitoring price action on the 4 hours for the possible move to the downside. Now, before I show you the second scenario, let's go and give a quick check at what we have from a COT perspective, and then obviously I will recap everything up so that it will be clear. Let's go and see what we have from a COT perspective. So what big banks and institutions are currently doing on gold. Now, what we can see here with the last report is that they have added 13.4K long positions. So a lot of longs added with the last report, and they closed 2K shorts. So can we expect the break to the downside? It's very difficult, right? It becomes even more difficult. That is why I say on the daily, all structure is currently bullish. However, if we look at the long term, we were sitting here at a very high 335K net positions, and we're now at 224K net positions. So a strong decrease. And in fact, longs have been cut almost in half from 408K all the way down to 277K. So a lot of longs getting closed on gold. However, in the short term, yes, they have added more longs. So that is why it is a little bit more difficult that the market will actually manage to break the structure. Now, two possible scenarios, just to recap. From a long-term perspective, we want to see the market make a deeper retracement. However, everything is still bullish. We need to see a break of structure, which can happen in two ways. Either a fake breakout to the upside, so break above, break back below. At that point, on the retest of the level, with students, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, then we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. On the other side, if the market from here will just break the structure and close below it, then at that point as well, we expect a retracement because the market will have provided this information. And on the retest of the level, in this case here, we will be monitoring price action on the 4 hours, waiting for the market to provide to us one of our valid entries for the move to the downside. So two possible scenarios that would provide a reaction to our side, because always remember, trading is reactive, not predictive. You can't predict the market, but you can react, and you can know how you will react by applying your strategy, the rules of your strategy. These are two options that will provide a reaction on our side and in which we will add gold on watch list for a possible trading opportunity. If the market will break to the upside and on the retest not close back below the area but show support here and continue to the upside, we are perfectly fine with missing out on the up move on gold, because there are way better pairs to follow with better probabilities and better risk to reward. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.